Welcome back. You're still tuned into Halftime Report on CNBCTV18. One sector which is buzzing on the upside is IT. A lot of interest there. We do have Wipro, which reports numbers. Tech Mahindra will be in focus. And we've received a slew of earnings from the mid-cap and the large-cap IT space as well. What next? How should investors look at this particular sector from an investment lens? Sandip Agarwal, Fund Manager, Sowilo Investment Managers, is joining us now. Sandip, good afternoon. Thank you so much for joining us. Well, that's the big question. We've been getting some opinion that these stocks are below their intrinsic value. We've had conversations with you as well. It's been one day up and one day down for the Nifty IT, right? What are the trends suggesting now, barring the Q1 numbers? What are you watching out for going forward in terms of stock moves and earnings growth?
So good afternoon and thanks for having me on the show. So, what is right now happening is we are very closely tracking what is happening in the US markets, and fortunately, the analysts there in the developed markets, particularly in the US, they are not preferring any of the IT services companies. So basically, if you see the Accenture, the recommendations and the and the way they are marketing is more inclined towards the hardware players, the GPU players, and the foundational players. So there is no one who is talking about them, and because of that, a slight disappointment. These companies are falling, and now Accenture has come close to like below 10 times earnings. So we are basically also trying same way. Whatever happens there, the next day the follow through happens here. So we are being right now for chasing what is happening with the IT services firm in the US, and that is the reason you are seeing this pain. There is no honestly incremental negative news which is there. I think 1.5 years back we were in a euphoric valuation period. Now we are in the other side of it right now, as you rightly shared, that the intrinsic values are much higher. So I think rationality will return. Let this company start posting numbers. This quarter is the first quarter where numbers have not disappointed for anyone in a big way. I think next quarter onwards there will be some stability, further stability, and more interest will return, and slowly the sector will gain pace. That is what I believe.
Okay, slowly this sector will gain pace. Sandip, afternoon, last time when we were talking as well, you said that, upgrades will start coming in for IT companies as well in the next 6 months. Obviously, the stability comes in earnings and then you will see upgrades. But this level of upgrades, where will it start first? Well, is it going to be more mid or is it going to be for large cap companies for IT side?
No, I think upgrades will come across the sector. And while I conservatively, I think 6 months, but it can happen from next quarter also. Because the enterprise AI is now taking shape, and when that happens, then we will have a big role to play. Now, also remember that it is a mature sector, so lower growth for longer is the phenomena. But even lower growth for longer with better margins is not priced in. So you will see some upgrades and also buying interest. So I think a combination of some re-rating, some buying interest, some growth will all bring together desired results. So I think the sector is poised for better returns from here.
Sandeep, interestingly, you've said that, Indian IT is tracking what the US is doing. IBM was disappointing in terms of what it reported, at least the pre-earnings. What was the read-through for Indian IT, according to you?
So on IBM particularly, I think, it was more to do with the algos which run in US, not really, we have no interlinkage with the disappointment which was there in IBM versus where our ruler, we are not there in that space. So I think what is happening is that if any negative news is coming, then across the board, the algos on their own probably go and take positions. And because of that, and you could have seen that, while the ADRs were down sharply, we have not seen that downside in India. I think, when the sector stabilizes, you will see a lot of volatility for 3 to 6 months when it will go up, it will come down based on the new information which flows in. But fundamentally and logically, it looks like finally there is an upside and good upside from here.
Okay, so there could be an upside from here. When you say that there could be upgrades going forward, you're conservative when it comes to 6 months. This could be as soon as next quarter itself. Is it largely in the large cap space? How do you compare the two, the large caps versus the mid caps? Because even the mid caps have reported mixed earnings for now. What's your take between the two?
Actually, we are not seeing the sector now, large and mid cap, that we used to see before 2021. Since then, because the deal sizes have got shortened and the execution periods have got shortened, I think, in fact, mid-cap and small cap has been benefited in a big way, and that will continue for a few more years. Having said so, I think ER&D is one space where I'm a little cautious, but non-ER&D, that is the traditional IT services where, all the large companies operate and a lot of mid-caps are there. I think that space is going to do well with enterprise AI opening up. In ER&D, I think there are two problems. One, the multiples are still very high. And second, I think a large part of disruption there has to play out. So I believe that we will not buy right now any of the ER&D plays, but IT services definitely look good.
Okay. Sandeep, we were also talking about the HCL Tech foray, the data center side as well last time. And you said, this is something that could give better returns. Are there more such deals or such situations in the work for other IT companies? Is that something we can expect more from these IT companies as well?
Well, I think that the way when the international banks, global banks and all, what they did is they opened up GCCs in India, and at the same time they outsourced a large portion of their work to Indian IT services firm because they wanted a small backup in form of GCC also. Same thing you will see in the data center side. I think, all these companies, because they are the best to run those data centers, they are the best to run intelligence layer on that. So I think, the next round of outsourcing will be in this space, and that is what these companies are spending and doing capex. Our companies and management has never been vocal about what they want to do and all. And that is one more reason why, the investors are worried, because they are not getting direct information what is happening. What they are getting is, in terms of stock reaction in the US. And that is one more reason why, there is panic and all this thing. I think companies are in the right direction. And definitely, rather than distributing as dividend or putting money in FDs for 5-6% return, this business will have much higher return than that. And they are well equipped to do this business.
Do you look at a couple of the smaller IT companies, say, for example, the L&T Tech Q1 numbers that they reported? They seem to be quite optimistic about FY27. Tata Elxsi, where there was a huge margin miss that came through.
I want to comment on any specific company. My only worry in the ER&D space is that, ER&D space is still not priced in all the deflation which will come because of AI. And second, they are very expensive. So I will be a little worried on the AI, on the ER&D space.
And what about the data center bet by HCL Tech? I know you can't talk stock specific, but if there is more expansion or diversification, so to say, by these companies, you think that is a good capital allocation policy?
Yeah, definitely. Because see, I think this is the right approach, and they are going into the right direction, because that cash which they have, they are anyways not able to utilize it for any business purpose. So this is a better business, because that will give them annuity revenue, and they will be able to build the intelligence layer on that, which can be offered as service. So I think it is a very, very good step which all these companies are doing, and all of them will go into that direction. That is what my belief is.
Sandeep, a quick one in terms for overall IT sector for FY27. What is the growth rate that you are anticipating now for the full year in single digits? Will it be mid-single digits or low single digits?
So I think we will be mid to low single digit, because, as I said, that till September quarter, we will stabilize, and after that, you will see growth. And unfortunately, the third quarter has a lot of holidays and furloughs because in the manufacturing part, and then the fourth quarter has less number of days in February. So you may not get a big delta, but let me put it this way, the year-over-year quarterly growth in December and March should be better.
Okay, all right, Sandeep. I'm sure we'll speak to you as time goes by. There are a lot of numbers still expected from the IT space. TechM and Wipro is what we will be watching out for in post markets today. Thanks very much for joining in and speaking with us. We'll take a short break on that note.